Hello everyone, welcome back to Mindful Investing. Is this just the beginning of a new bull market or are we just being baited before the next dip? Well, Tom Lee thinks the bull is just waking up, and not only that, he's raising his S&P 500 target to numbers that will blow your mind. Let's break it all down.
Trading day of June, second day of June. Our first guest today says the current market looks more like the start of a new bull rather than a late cycle bull, and that could mean some good buying opportunities. Joining now is Tom Lee, Fundstrat Capital CIO and head of research and a CNBC contributor. He's very calm, even in the face of adversity. But this time the markets have come back to you in a big way. Because at this point, I think they've exceeded your targets they were a couple of months away from where we are right now, and we're already there. So you're raising your targets overall?
Straight away, this is a big statement. Most people on Wall Street are still being careful, but Tom Lee is feeling positive. He's not just guessing, he thinks this isn't the end of a market cycle, but the beginning of something much bigger. The sharp drop in April scared a lot of investors, and that kind of panic can clear the way for a fresh start. That's when smart investors start buying a little at a time.
Yes, I think, when at the April lows, we thought we could make a move back to 5,500.
Right, we're 5900 on the S&P.
That's right. But our full year target was 6,600. So I think that's still a reasonable expectation.
You never changed that?
We haven't changed it.
You never did? Even on April,
I think
of April 2nd or 7th or 2nd, you didn't change it?
No, I felt very shaky because that would have been, a couple thousand point move needed. But now that I look at 2026, I think businesses are in better shape now than they were in February. So I think making 6,600 actually seems more achievable today than it did in February.
When you think of bull market,
A 6600 target for the S&P 500 sounds exciting. It's about 30% jump from today's level of around $5,900. If you are invested in the S&P 500 or the big growth stocks, that's awesome news. Tom Lee isn't just hoping, he's pointing out that businesses are doing better than they were a few months back. Even when the market freaked out in April, he stayed confident, which I respect. I'm watching this closely for my $200,000 portfolio. Check out my latest video on my full portfolio update and let me know what do you think about this. Alright, let's move on into the video.
it started April 7th, or a new bull market.
Yes.
In everything, because the NASDAQ already, if you just use 20% to measure what is an actual bull market, people think we need a broader indicator, a broader reason to call something a bull, but at this point, I think the S&P is also in a bull market.
Yeah, I think that the waterfall decline into the April lows was such a reset of sentiment. People talked about Armageddon, and we saw some of the most rapid deleveraging of hedge funds ever, and a collapse in investor sentiment, and a huge change of positioning. So those are, I think, things that look like what happens in a bear market. And the ISM has never broken above 50 in a sustained way. Market tops usually need an ISM to stay above 50 for a period of time. So I think we're at the start of a bull market. And as I look at 2026, I think housing could actually be a big lever to pull next year.
He's right. By classic definitions, we are already there. But what's more interesting is his take on what drove this setup. A massive hedge fund deleveraging event and one of the sharpest collapses in sentiment in recent memory. This is exactly the kind of environment where bottoms form quietly before the rally roars.
What do you think of the recent inflation data? And is it real? Is it lasting? Is it going to turn around and head back up because of tariffs? Were you surprised at those numbers on the last couple of Friday and then a couple weeks before then?
Well, as you know, the inflation for the last month actually has defied expectations because a lot of people said these shortages would cause a spike, and instead core inflation actually has been trending lower. But to me, inflation was really a story about housing and auto insurance. Those were powering inflation for the last 2 years. Combined, that's 75% of the rise in inflation. Housing is actually now subtracting from inflation month over month. And I think in some ways, on a real-time basis, that tells me I don't think core inflation is actually going to be turning up even if goods prices go up.
You don't?
No, I kind of agree with Waller's comments.
You do agree with Waller's comments?
Yeah.
Tom's view on inflation is refreshingly specific. While many are yelling about tariffs or goods prices, he zooms in on housing and auto insurance, which he says made up 75% of the inflation surge. And now housing is no longer pushing inflation up. That's huge. It supports the idea that core inflation could be sliding, even if the Fed holds the rates steady.
So you're anticipating cuts, several cuts this year?
Well, I think that if core inflation behaves, then we are in a really tight real rate environment, right? 4.5% monetary policy and 2.5% or 2% core inflation. There's a need to actually reduce interest rates.
Do you, Tom, at this point think that interest rates Because it doesn't matter whether we reduce or not. Would the long end go up if they reduce the short end because of 37 trillion or this bill that's the big beautiful bill? Are there worrisome things on the horizon other than inflation, current inflation?
Well, yeah, the U.S. is on an unsustainable sort of path for deficits, but Japan's actually had higher rates, and their interest rates have been behaving for a long time. I mean, not recently. So I think the long end is essentially unpredictable. When investors worry about it rising too dramatically, then I think that's when the bond market can have some influence on both the Fed and the Treasury. But I think at these levels, it's not that alarming.
Here's the big macro takeaway. If inflation stabilizes or declines and rates stay this high, real yields are too tight. That's when the Fed starts to cut, not to stimulate, but to stop squeezing too hard. Tom's framing it as a normalization, not as a pivot, and that's bullish for equities and Bitcoin.
What's Bitcoin up? What is it moving? What, just risk assets at this point? It got back to an all-time high, which you were forecasting as well. But now I think what are we 104 this morning, so it pulled back.
Yeah, I think it's consolidating. It makes sense. Bitcoin is responding to global liquidity, which is moving up, and I think anticipating a dovish Fed next year. So that's a tailwind for Bitcoin. But Bitwise has a great stat. 95% of all Bitcoin's been mined, but 95% of the world doesn't own Bitcoin. So I just think that there's still a huge demand versus supply imbalance, meaning there's a lot more potential buyers of Bitcoin over the next 10 years. And so I think there's a lot of upside into year end.
Now, this is where it gets wild. Tom sees Bitcoin not just holding current levels but potentially doubling or even tripling in price before year end. He ties it to global liquidity and supply demand imbalance. Remember, 95% of Bitcoin has already been mined, but only 5% of the world owns it. That's a huge long term setup.
Into your like 150 target.
Yeah, 150, maybe 200, even 250 this year.
What? 150 to 200 to even 250. And what's you don't have a terminal price on that, do you?
Well, it's I think at a minimum it should have the same network value as gold. Mm-hmm. And if you look at above ground gold, it's probably 23 trillion. So that would be 1.2 million for Bitcoin. But I think Bitcoin is more valuable than gold. So gold. I mean, Bitcoin would be 2 million. 3 million long term. I mean, even higher.
Okay. Thank you.
Tom goes full network effect here. He's not just talking about price as a trader, he's talking about the eventual monetary value of Bitcoin in the digital world. If BTC captures gold's market cap, we are looking at $1.2 million per coin. But he believes Bitcoin could go even beyond that, and long term is talking multi-million dollar valuations. That's a generational call. So, what do we take away from this? Tom Lee is making the case for a bull market that's just beginning, for inflation that may no longer be a threat, for rate cuts not as a rescue but as a normalization, and for Bitcoin's rise as a global monetary asset. Do I agree with all of it? Not all 100%, but I think this perspective is crucial to consider right now when investor sentiment is still shaky. Let me know in the comments below. Do you think the S&P 500 can hit $6,600? Is Bitcoin headed for $150,000 this year? And are we really in a new bull market? If you like this video, please like and subscribe. It will help grow the channel. That's all for today, and I'll see you in the next video.